Well, hello, everyone. My name is Caitlin Moore. I am from Union Bank and Trust, and we hold your retirement plan here at Crete. I have with me Joe Recker. He is our investment officer at Union Bank and Trust. He's been with the bank for about 9 years, and I brought him along for part 2, actually 1, 2, and 3 of these podcasts, just to talk more on investments within your retirement plan here at Crete. So we're talking very specifically about your retirement, the funds available within their retirement. And if you didn't listen to episode 1, I would encourage you to do so. We're going to have another one that gets into more of the nitty-gritty of something else. So stay tuned for that. But I'm just going to open up with some questions for Joe. I'm going to respond also. But we did go through this yesterday together, just kind of talk through fund basics within the plan. Joe has been my go-to at the bank because he's allowed to give advice and he is more educated in this than I am. So I brought him along to help kind of explain through fund basics a little bit better than I could, even though I feel like I have the main gist of it. So let's start off with one of the questions I get a lot is, what is an index fund? Now, within our account here at Crete, we do have index funds. But that can always get a little bit confusing on what that is compared to, say, something that's not an index fund. So could you just kind of expand on what an index fund is?
Yeah, so if you're talking about two types of funds, so one would be an index fund, and there's actively managed funds. Okay. So what an index fund is, it's a fund that's tracking a benchmark or an index of a particular area of the market. The most common one that you'll see is a fund that tracks the S&P 500 index. Okay. That's kind of the most common one that you'll see. And those funds are good because they're low cost. They're just trying to return what the market's getting. Okay. And cost-wise, they're very inexpensive.
So it's basically a mutual fund. Like in our case here at Crete, it's a mutual fund. Yep. So it's a set amount of companies that are in there. And the lineup is kind of just following something that's already working in the market. So when we say the S&P, we all can turn on the news, find the S&P 500, top 500 companies in the U.S. Well, there's other index funds that follow that kind of lineup, and because it's already doing well. So we're just following it in a different way. Is that accurate?
Yep. And then there's different indexes for different. There's indexes that follow small cap companies. There's indexes that follow international companies, bond funds. There's different indexes for all the types. And you'll see that on the, when you're looking at the investment lineup for a Crete Carrier, you'll see, it'll say the word index on it if it's index fund. If it doesn't say the word index, it's an actively managed fund, which means there's, a portfolio manager that's researching companies to put in the portfolio. They're trying to beat the market is kind of their goal. But the downside of that is that costs more. When you're talking about expense ratios in the funds, you're going to pay more for that. And then, the risk always is, that they don't beat the market. And
sure. So, and that actually brings up kind of the next question. We talk about fees within our funds. So we're talking about index funds, lower cost because it's just a set lineup of companies.
No active management. They're just tracking something that's already been built, essentially.
So something that's not an index fund is actively managed, meaning the fund manager can actually move companies out of it if they want to. They're researching what's the best within various criteria to be in this mutual fund. But there is somebody back there in a back room doing something. But there's a group of people that are deciding, hey, this is the best company to be in this, companies to be in this. So you're going to pay a little added fee because somebody's actually doing that for you. Yep. So why would one be beneficial over the other when we're talking fees?
If you're just talking fees,
index funds are cheaper.
Index funds are cheaper. They're maybe not. There's not going to be as much volatility. Maybe the ups and downs are not going to be as high. Different market environments are going to be better for different active managers. So you have to kind of know what you're getting. Sure. You maybe do a little extra research if you are investing in those active funds. The index are a little bit less work that you have to do. You just kind of say look, hey, I want a small cap fund. And
set it and forget it.
Set it kinda.
Right? Because we're talking about
A little bit more,
long-term
yeah.
investing.
Yeah, with an active fund, you kind of maybe need to look at, have they changed for portfolio managers? How are they performing? You kind of maybe need to do a little bit more research.
Sure.
When you're looking at using those funds.
Yeah. And one of the great things about our website when you log into your retirement account is you can go to manage investments and get the entire lineup, everything that is offered within your 401k here at Crete. You can click on each of them and they go to a Morningstar report. And that is specific to the fund and it will give you everything you would want to know. It's kind of hard to read unless you know what you're looking for, but if you've got some time to do the homework, they show the companies, the sectors of the market. There's so much information to do homework on these funds, but there's also options if you don't want to do the homework. That's okay too. But we do make it available for our participants to do homework if you want. So if you are, avoiding the index funds and you're picking your own, that are actively managed, maybe you want to know the sector of the market. Maybe you want to know the companies, how they're doing over time and things like that.
Yeah, to have the performance on there
Exactly.
and expenses and all that stuff.
Do we see those expenses show up in our accounts really?
No, those fees just come out of the performance, the rate of return on the fund. So, a participant's not going to get billed that. They just, the fund just kind of takes that out automatically.
Correct me if I'm wrong, but on the participant statement, it shows the fund that they're utilizing or funds. And then there is a fee column in there that shows the small fee that was associated with that.
I don't know if that's on the statement.
Okay.
I don't know if it shows the expense ratios on the statement. But
not the expense ratio, but maybe as a whole, how much they were charged during that quarter when they bought into those.
It should be on.
Okay.
That should be on the statement.
And it's always very small, but I get a lot of questions about that, where it's coming from. It's not the account fee, it's the investment fee. So if you're interested in that, we do have a breakdown of that information if you're ever wanting it. It's not a popular question, but we have the information available to you. So one question I get a lot across the board, not just with Crete, but just in general, and I think you get this question a lot too, is why do we not offer precious metal exposure within our funds?
There's all kinds of different sectors and types of funds that a 401k can have. And so kind of the goal of what they're looking for is they need to put investments in there that are appropriate for everybody. Okay. Precious metals, you really need to have a little bit higher level of expertise on those. They're a little bit more complicated. They don't correlate. The returns don't correlate with the rest of the market. There's different things, that drive the returns. There could be geopolitical events, inflation, just
okay.
Somebody maybe thinks the recession is coming. There's just all kinds of different things that drive the returns on precious metals. That's different. So, and there's a lot of different ways, when you're looking at precious metals and maybe looking at mutual funds that, are precious metals funds. There's a lot of different types of funds. There's ones that actually invest in the physical, the physical metal, the gold or whatever, actual physical gold. There's ones that just invest in the options contracts. There's different ones that invest in just mining companies. It can kind of get confusing, if you're not sure what you're looking at and what you're looking for. So, there's a lot of reasons why, maybe it's not appropriate for people because it can confuse people and maybe just there's more volatility with those funds as well. That and when the precious metal fund goes up, the market, might be opposite of the market, So it takes a little bit more education to know why, and maybe that's not a bad thing, but some people might get worried about that sort of thing if they're not sure and have done the research.
So UBT just kind of has looked at it as this is just not a great investment outlet within a 401k.
Correct. Yep.
Because it's not for everyone. It's very specific. There's some specific learning behind it, some education behind it, that if you want to go that route, there are so many options outside of a 401k to get involved in precious metals.
There's just certain types of investments that are better off, you're
long
better
term.
off long term and then you and just do that outside of the 401k, open an account somewhere else to do that. Because it's, it's appropriate for some people and not others.
Yeah. Okay. Well, good. I like that answer. Nice and easy. So we're not saying don't. We're just saying within a 401k, when we're looking at growing an account for 20, 30, 40 years, it's just not a great option and not for everyone. And we want to offer all of our participants an equal advantage with our options that we have. And precious metals just isn't one of those. It's kind of like, it's not an equal opportunity. So we're just going to skip over that. But we're not saying don't. There's other outlets, just not in your 401k.
Yep, exactly.
That's it. Perfect. All right. So when I did mention, UBT doesn't offer the precious metals within the lineup. So actually, how does that work as far as what if UBT decides that we don't want to fund in our accounts anymore? So we've got a certain mutual fund that just we don't like anymore. Do we just take it out tomorrow? Can we just say, hey, Crete, we're taking this out, and leaving that fund behind? Like, what happens to the money? How does that work? How does the process work?
Yeah, there's if there's a process that UBT would go through, as far as removing a fund or replacing a fund, whatever the case may be. But typically what happens is the fund would be replaced. We would just remove it and then map it somewhere else. So what would happen is this fund needs to be replaced for whatever reason. UBT's done research and it's not underperforming. It's not appropriate for whatever reason. Yep. And so UBT will find a replacement fund and then communicate that out to Crete Carrier and then the participants. Typically, it's the communications and the quarterly statements saying, this is the fund that's being removed. This is a replacement fund. This is the timing of that change. And if you don't want to, if you don't want to have your money moved into that replacement fund, you have time. You can pick something else and do that before that change happens.
So what you're saying is it doesn't happen tomorrow, right? And even deciding, UBT deciding that this fund, we got to get it out is not a quick process. I mean, I've seen UBT take a year or two to even red flag something, which means they've been doing homework for a while. Then they red flag it. They approach the company about it. They watch it longer and longer just to make sure that it's, what if it was a fund manager issue or it's the companies within there? Just, you guys are doing a lot of research.
There's a constant monitoring process on all the funds to make sure they're appropriate.
And then when we decide to pull the trigger on, let's move it out, we're going to offer a replacement. We're going to communicate it to the participant with a long period of time. And we're talking like I've seen it happen in like a quarter, 2 quarters, 6 months sometimes.
It's going to take a couple months minimum.
So you have time. If you're in that fund, you don't like the replacement, move your money out of it to something else, and then that takes place. So this is a long process. I do get a lot of the phone calls saying, hey, my money moved into this other fund. There was a lot of communication to let you know, but it's also a replacement fund. So when we have replacement funds, what's the quick version of what is a replacement fund?
Typically, it's going to be a similar fund, like style-wise. If a large cap growth fund is being removed, then the replacement fund is going to also be a large cap growth fund.
But more than likely, hopefully, it's making more money. Maybe the expense ratio is smaller. There's various things to say this is better than the last one, so we're going to replace it. Yep. Right? Okay. So we're always looking in the best interest of all of our participants. We want to make you money.
Behind it.
Yeah, exactly. Okay. But there's nothing that the participant has to do to make that change. It's going to be automatic in the timeline that is communicated to the team. Perfect. All right. With Crete Carrier, we have what's called a general investment fund.
Yep.
So if anybody logs into their account, they're going to see the investments that they chose, plus one at the top that says general investment fund. And this doesn't happen all the time. We have companies that utilize general investment funds. What this is Crete, the match and the profit sharing that they give a participant, an employee, they put it in a separate fund that they are investing a different way than what, say, I have chosen for my account. Can you tell us more about what that is, how it works, the overall how does it work within an account?
Yeah, so what it is, it's a professionally managed investment bucket, I guess you could call it, and Union Bank professionally manages that. Okay. And kind of the goal or the objective of the fund is growth and income. So that's, part of it is, they obviously want to grow the fund, high performance, but also one of the goals is income and low volatility. So what that means is they'll have about 60% stocks in the fund, and then the remainder will be bonds and fixed bonds, money market, something, a little bit more
on the
conservative. That, in bonds, they generate income. They pay a dividend. Depending on the bond, it can be different frequencies, but that's where that income comes from. Mm-hmm. So that's kind of the objective of it. But yeah, it's you get a professionally managed fund. I guess I'll call it a fund, by Union Bank, within your plan, mm-hmm. which is a pretty good deal.
So it's almost like a target date fund, which we're going to talk about in the next episode. But it's kind of a whole portfolio.
It's a full portfolio. Yeah, it doesn't have the glide path like a target date mm-hmm. fund will, but yeah, it's a full portfolio, professionally managed.
It's usually around 60-40 then.
Yeah.
So 60% in the market.
Yeah, it can deviate a little bit. I mm-hmm. think it can go to like 65-35 sometimes. Okay. But it's typically going to be in that ballpark.
Yeah, I've noticed that the growth on the general investment fund is usually on par with a lot of the mutual funds anyway. There's not a huge discrepancy in earnings. So even if you are closer to retirement, it's aggressive, but overall it
could be a pretty good option for people of all ages, honestly. Yeah.
And it defaults. All of your funds coming from CREIT directly go into that general investment fund unless you say differently. So it is something that everyone has unless you've made a change.
And you have the option to get out of it if you want to.
Yeah, exactly. So
some people might want to be a little more aggressive or whatever reason.
But it is an aggressive fund. I think that's what I really wanted to talk about. That it is a pretty aggressive fund, being a 60-40 split there. So it's not like it's just sitting in there in cash.
Yeah,
it is. We are trying to earn money off.
If that money's working for you,
yes.
Definitely. Yeah, if it's in the markets.
Yeah, perfect. All right. Well, that really helps, just the fund basics of this account. So I appreciate your input on this. Like I said, I'm the educator for the plan. If you have questions about your funds within the CREIT Carrier account, feel free to reach out to me. You can reach out to Benefits here. They're going to point you to me. Happy to take those phone calls just to explain a little bit more about your account if you ever do have questions. And it helps me to know what the questions are so we could address them kind of like this. So keep asking questions. Feel free to email me if you would like to. But stay tuned because we are going to talk about the target date fund, which is within your account. It's an option that you have, kind of a set it and forget it, but we're going to go into the nitty gritty of what that looks like and how that works. So stay tuned. But thank you for joining us today.